What's going on, guys, and welcome back to another video. So as I'm sure you're already aware, there's been a huge crash in the Chinese stock market. So in today's video, I'm going to discuss three topics. Firstly, we'll discuss why there has been such a big crash within this market. We'll discuss what damage and lasting effects it has had on the Chinese stocks. And thirdly, we'll discuss what this will mean for you as an investor going forward. So with all that being said, let's dive right on into today's video. So only about an hour ago, we got a notification on my Trading 2 portfolio about these drops. So I thought today would be a kind of appropriate video to make a video on this and why it's happening. We can even see here, we got a notification on my platform here, sitting at the likes of Alibaba, a Chinese stronghold company, is down 13%. Tencent is down 19%. Pinduoduo is down 21%. And Didi is down nearly 30%. Now that's only a handful of the major Chinese stocks. And no doubt it has had a huge knock-on effect across the board, and not just in the Chinese market as well, which we'll discuss later on. But again, we'll just kind of have a brief look now of why there has been such a big drop in the Chinese market. So one of the main reasons why there's been a crash is due to the Chinese tech stocks and regulators applying more pressure, which you can see from the heading of this article on the Wall Street Journal. Now, as you know, any impact in one sector can definitely have a long-lasting effect across all the other sectors within the market as well, and that's no different across the Chinese market this week. Now, knockdowns like this within the Chinese market, again, will have ripple effects across all global main markets. We can even see here, for example, on the one-day chart within my 33 stock/ETF diversified blue chip portfolio, it's going down a fair bit over the last few hours. Again, this is due to the knock-on effect, and it kind of might show warning signs as well of a potential crash down the line. Again, I'll link a video in the description below where we discussed that a few days back within the US markets, as there is a bit of a bubble at the moment. But again, this can kind of give warning signs as well, and it does create a bit of fear in the market. Again, even though this Chinese impact doesn't have an overall impact within the US markets, it definitely has a ripple effect, and that will start to give emotion within the markets, effectively getting people to panic sell out of their bubbles, especially because the market is in a bit of a bubble in the US at the moment. So a lot of people will want to start taking their profits. Now, as a long-term investor, you can see here I have €400 in free funds, and the main reason here is I want to build up a cash reserve ready for any potential knock-on effects from this crash. Now, as you can imagine, the US-based Chinese stocks as well will have an impact here, which again will help drag down the overall markets across the globe. We can see on screen here that they have dropped to the lowest in over a year as Beijing ramps up their crackdown on corporations. So again, a lot of people will know this already, but the markets do drop a lot faster in terms of reactions than when it goes up. For example, if there's some good news, the stock might go up 1 or 2%, whereas if there's bad, negative news, the stock will dive 5 to 10% very easily. So it definitely drops a lot faster than it goes up in value. So that's why a lot of people are starting to panic sell right now. So this meltdown or crash won't just be because of people panic selling, it would also be because people can short sell stocks as well, effectively making money once the stock goes down in value. And a lot of people will be shorting a lot of these Chinese stocks based off this news. We can even see here the heading that the Hong Kong stocks have kind of dropped drastically in fears and the US investment concerns. We can also see here at the bottom that a lot of people are dumping these stocks and kind of moving to the more kind of safe blue chip portfolio style companies within the US markets. Volatility is certainly key to making money within any market, and even as a long-term boring style investor, if that's what you would like to call a kind of blue chip portfolio, again, this does pose great opportunities to take advantage. Now, even though people are losing money, but for every winner, there is a loser, and vice versa as well. And that's no different in this market. People that were probably heavy in the Chinese market are losing a lot of money at the moment. But again, if you have cash on the sideline, this could pose a great opportunity to get in at cheaper costs. Now, again, that because they're down so much at the moment doesn't necessarily mean they won't go down even further. In fact, there's a very high possibility they will. So timing the market will be very difficult. However, if you dollar cost average into any of your current Chinese positions, you will certainly be able to reap the rewards long term. But again, this drop in value might have long-term lasting effects. So you'd really want to be a long-term investor if you do want to reap the rewards here with this drop. We can even see here on screen another heading that US investment banks may have lost close to $12 billion in Chinese education firms since they have crashed. Now, 12 billion in any rich man's pocket is still an extreme amount of money. So again, a lot of people are hurting because of this news. So although I'm not really fully invested within the Chinese markets, I'm mainly in blue chip US companies. Again, it might be a sprinkle of the odd Chinese company within my portfolio. However, what I find really interesting is the impact and the ripple effect it will have on different markets. Again, a lot of my stocks are not Chinese, but they will be impacted by this news, drastic news that is. So again, that's why I have cash reserves at the sideline, because my overall portfolio probably will drop a small bit in value because of this news, even though it's not directly related. Again, it's mainly due to the fears of a lot of big investment banks and even the retail investors of why a lot of people will panic sell, hence dropping the overall price because the demand will go down as well. We can see here as well that Chinese markets have slumped to 2008 financial crisis levels. So again, certainly very worrying times if you're invested within this market. So as stated earlier as well, this will definitely pose a huge risk for even US investors if you're not even directly invested in the Chinese markets. Again, for every winner there has to be a loser, as we stated earlier, but you can definitely make money from people's downfalls, as bad as that sounds, but the main aspect here in investing is to make money however you see fit. So again, this can pose great opportunities to get in, especially dollar cost average into your existing holdings to get your overall average price down. But again, I would be kind of wary here as well, because this could pose definitely a trigger for an overall market crash. Now again, the US market is independent in a lot of ways, but when investors start to kind of panic and fear sets in the market across the board, this could be disastrous. Now, I've stated in prior videos as well that I do believe the US markets and most markets around the globe are in a bit of a bubble over the last 12 to 18 months, and something will have to give eventually. So you'd wonder, would this potentially be the start of an overall global crash? Hopefully not, but again, if it does, you shouldn't panic if you're a long-term investor, because it just gives you a better overall opportunities to dollar cost average and make bigger profits long term. Now, a lot of people have got a lot of interest in Chinese companies, particularly tech, but we can even see here one of their newer indexes for tech companies within China, the Hang Seng, is down 551 billion in market value, has been wiped off because of these implications. Now, that's huge money, and again, this will have knock-on effects across the board. But again, that doesn't necessarily mean bad news for investors, because this will mean that a lot of people will start to go to the more kind of safe bets in terms of blue chip portfolio companies, which could actually increase the demand, which could drive up your overall prices across the board. Another point worth noting as well, if you're interested in Cathie Woods and ARK Invest, is that they are starting to unload a lot of their Chinese stocks. Again, Cathie Woods has a lot of promise in these style companies, but for the likes of ARK to start unloading, or offloading should I say, a lot of these Chinese companies is certainly worrying signs, because it will really drop the demand across the board, effectively driving down the overall price of the market even more. So again, this crackdown in regulations necessarily isn't a bad thing if you're a long-term investor. I just wanted to kind of highlight a few points today in terms of why you shouldn't panic if you are long-term in a lot of stocks, even if they're not within the Chinese markets directly, even if you're within the UK, the US markets, etc. There's definitely going to be some bit of a knock-on effect. So having cash heavy, or being cash heavy and having cash on the sideline, is definitely going to be a huge advantage going forward, not only as a long-term investor, but even a short-term investor. If, for example, you want to short the markets, or if you want to go long and you're hopeful that they will recover over the next few months or even years. So I'll be very interested to know in the comment section below, firstly, if you are impacted by this Chinese stock crash, and second of all, if you're going to be optimistic or are you pessimistic with this overall results, and you feel that this is going to have a very bad or very positive effect going forward across the board for all stocks. So thanks very much. I hope you enjoyed today's video, and I will see you all in tomorrow's video.